Welcome to PwC IFRS Talks, your source of all things IFRS, technical accounting matters, business issues, current standard setting, and regulatory updates. I'm your host, Ruth Preedy. In today's episode, we're going to be talking about something very exciting, which is the new world of cryptocurrencies, and really talking about what the debits and credits are. Now, this is obviously a new and expanding area, so we're just really starting to think about what we might do with our debits and credits today, and this definitely isn't our final view. But we're joined today by Gary Berkowitz, who's going to give us his thoughts on cryptocurrencies. Welcome, Gary.
Thanks very much, Ruth. Hi, everyone.
Okay, so you were almost expecting them to say hi back then, weren't you?
Yeah,
they can't speak back to us, it's sad times.
Right, okay.
Okay, so let's start with the basics. What is a cryptocurrency?
Okay, that's a great question. So obviously we're accountants and this is about the accounting, so I could probably try and convince everyone I knew what I was talking about in detail about cryptocurrencies, but try and keep that brief. I think in its simplest form, a cryptocurrency is really just a medium of exchange like the US dollar. So if you want to exchange something with someone, you'll use a cryptocurrency and then they'll give you other goods and services.
Okay, so I've heard Bitcoin all the time. Is it just Bitcoin?
No, so Bitcoin is one of the cryptocurrencies out there. And then if you want to get even more technical, cryptocurrencies are then based on that blockchain technology. And that's about as much as I know about blockchain. So again, it's a form of ledger which tells people, what they own, what other people own. But to answer your question, no, Bitcoin is just one of the cryptocurrencies we have. There are other cooler, funkier names out there like Ethereum, or maybe some folks have heard of Ripple or Litecoin. I'm waiting for IFRS coin to come out, and then maybe we'll all invest. But it's just they're all types of cryptocurrencies. Okay,
so in my basic mind, rather than having money in a bit of paper, I've basically got some sort of digital currency.
Yeah. So like the US dollar, a cryptocurrency has no intrinsic value. So it's not like you can exchange it for another commodity like gold, just like a US dollar. But there are some very important differences, and I think it's important to understand them because it makes a difference in the accounting, between a cryptocurrency like Bitcoin and a US dollar. And those are, for example, a cryptocurrency has no physical form. So although I can, get my dollars and show everyone and impress them with my dollars, I can't do that with a cryptocurrency because it's only digital. It only exists online. It's also another very important thing. It's not legal tender, so I can't. It's not backed by any government authority. It's kind of created in the air. So that's also very important. And as part of that, it's not its supply isn't determined by a central bank, and all the transactions are actually entered into and validated by the users on the system rather than a central repository like a bank or an intermediary. That's actually the key economic rationale behind it, is that you take out the middleman, and therefore it adds trust and value to the transactions. So those are the important things. And then also the cool bit of crypto. In cryptocurrency, the reason that's there is because it's obviously all encrypted online, and that's about as much as I know. It just means it's very safe.
Yeah.
Okay.
I love how you say the cool. I feel like we're cool accountants talking about this today. Yeah. The cool bit is all around the crypto. Okay, so that's really useful. That's giving us some characteristics of why cryptocurrencies are different from, say, just the US dollar. Why do I even care? Why do I care about it, or why should I care?
Why should you care? Because, as you know, the latest and greatest things, a lot of people are actually investing or buying into these cryptocurrencies. I said Bitcoin is probably, most of us have heard of Bitcoin. So a lot of people have bought into Bitcoin. Companies are buying into Bitcoin. And I think the reason we need to care is its popularity seems to only be growing over time. And these assets' values are actually becoming quite significant to potential balance sheets of what could potentially be our clients. And so why you should care, other than potentially investing and making an absolute killing like a lot of people have done, is that the accounting is probably going to become more important as these cryptocurrencies like Bitcoin and others become more popular and potentially get onto the balance sheets of many of our clients.
I can't even afford one coin, I don't think. But anyway.
Neither can I. Just to be clear, I think neither I nor Ruth are currently invested in Bitcoin. We're not
We're just talking
Bitcoin
about the
debits.
Or
any other cryptocurrency. Yeah, that's right.
Okay, so we now know what it is. Obviously, the key thing we care about on this is IFRS and accounting. So what accounting standard does cryptocurrency fall into?
Yeah, so this is where folks might be slightly surprised and or shocked. So I think at the moment, folks would probably say that a cryptocurrency, if you're going to try and put it into a standard, is most likely going to fall into IS2, our standard on inventory, or more likely into IS38, our standard on intangible assets.
Okay, I wasn't expecting you to that. I was expecting you to say it was a financial asset, to be honest. Why isn't it a financial asset?
And that is, you wouldn't be alone, Ruth. That's generally where most folks gravitate to. This feels like currency. And
I've got my shocked face on.
Yeah, okay, yeah, because I was waiting for the... But obviously, for those who can't see, Ruth has got her shocked face on. But the reason why, unfortunately, it doesn't get into our financial asset accounting is because to get into financial asset accounting, you need to either have something that is cash, and unfortunately, to be cash, you need to be legal tender. And remember when I was explaining about the characteristics, it's not legal tender. So unfortunately, you fail that important part of the definition. The second bit is it's not a cash equivalent, because to be a cash equivalent, the value in the underlying shouldn't be exposed to significant fair value changes. I think anyone who knows anything about Bitcoin knows that these things are exposed to significant fair value changes. So unfortunately, it fails to meet the definition of a cash equivalent. And the last bit of the definition is to be a financial asset, it needs to evidence a contractual right to receive either cash or another financial instrument or cash equivalent. And unfortunately, it fails that part of the definition as well. And because you fail those three pieces of the definition, unfortunately, you fall out of the financial instruments guidance, which means we can't account for it in the scope of that standard.
So trying to hunt around within the big IFRS book, we found that it sort of meets the definition of either inventory or an intangible. So if today I'm looking at the standards, how am I accounting for that then?
Yeah, so unfortunately then if we fall into kind of inventory or intangibles, the base measure there is cost. So if you're in inventory, you'll measure at cost and that's it. If you fall into intangibles, initial measurement is at cost as well. And then most folks' subsequent measurement default is to cost. But remember, there is that little bit in IS38, the intangible standard, that says, look, if there's an active market for the intangible asset, in very rare cases where it's observable what its value is, you have an option to measure it after initial recognition at fair value. I think to date, the only thing we thought there was an active market for used to be, I think, cab licenses.
Milk quotas.
Yeah, or
it was milk quotas.
Milk
was
quotas.
My example.
But I think if ever there was an item that might actually get through the hurdle of saying there's an observable market for this, it would most likely be something like a Bitcoin, which is actively traded and is only getting more popular. So you might be able to argue maybe that you can measure these things at fair value, but unfortunately that's kind of second prize, because even if you do measure it at fair value, the changes in that fair value will have to go through the comprehensive income, through OCI, not in profit and loss, and they won't be recycled when you actually realize the value in the underlying Bitcoin. So you can kind of get the balance sheet right, maybe if you're in the intangible assets, but your income statement is not going to look right, at least in my view.
Yeah. So just on that point, it does feel like if you said to anyone that vaguely was accounting, not living deep into the standards, you think it's a financial asset and makes sense to be fair value. And really, if you said it was inventory, I don't think people would believe you, but I'm pleased that's where we are today. So what is the right answer? That doesn't feel right.
Yeah, so I'm glad you've asked that, because clearly all the right answers you should be coming to me, Ruth. That's good. It's good that you're basing your trust in me. Now, I don't think there is a right or wrong answer, but I think you're right. If you were to ask the common man / common accountant who still have common sense, I know people doubt that there are many of us out there anymore, but I like to think there are. I think most folks would gravitate to say this thing feels a heck of a lot like some kind of financial asset that should be measured at fair value. It's very volatile at the moment. It's being used, I think, as something people are trading in, just like a normal investment and making short-term gains on buying and selling this item. It feels like its subsequent measurement should be fair value through profit and loss.
Yeah. And so obviously that isn't what people are doing at the moment. So it feels like something maybe the board should address. What are the board doing? Is there a project on it?
So last I checked, there was no project on it, and I don't think the board currently has the appetite or maybe the bandwidth to take it on. So at the moment, there are no current plans for either the board or the interpretations committee to look at it. I think what will be very interesting is, as the popularity increases, which it does seem to be on the rise, not just with Bitcoin, but other cryptocurrencies, if they start being used as the normal way in which people transact online to buy and sell goods online, I think there's going to come a time when we're going to need to answer the question.
Yeah, so the board might be getting some letters soonish if it really picks up even more pace. Okay, perfect. So currently no board project. So if I'm a company today and I've got Bitcoin, what should I be doing?
You should probably be jumping for joy because the value went up, I think, about 700% in the last year. But I think I should probably then throw in again, neither Ruth nor I have, nor are we advocating, the purchase or sales of Bitcoins. But I think from an accounting perspective, what you should do, I think there's maybe, we always say disclosure is a crutch that shouldn't be used when recognition and measurement doesn't work. But I think in this case, that's probably the best you have at the moment. So to the extent that you're caught by either measuring the stuff at cost, either cost all the way through or revalued, but putting the gains through OCI, as we mentioned, I think the next best thing you've probably got is just to disclose at least what the fair value of these items are to the extent they are material. And then someone can see, okay, this was the amount that went through OCI. If it's at cost, this is its actual observable price. There's nothing prohibiting or stopping you from saying, these are the items at cost, but by the way, based on the latest exchange on this date, this was the value of a Bitcoin, to give a user at least the tools they need if they would like to convert it into something at fair value through profit and loss.
Brilliant. So perfect parting tip there. I think, if you're listening to this and the board hasn't got a project, and it feels like in today's accounting, cryptocurrency either fits into inventory or intangibles, which maybe we don't see as such a logical accounting. Key thing is really transparent disclosure of what you've got. Is it material? And then if it's material, lots of stuff to tell us what's going on there with the value. So thank you so much for joining us today, Gary. It feels like a very exciting topic to discuss, cryptocurrencies and how to account for it. Thank you everyone for joining in. If you would like to find out more information, we've got lots on our website as usual. So that's pwc.com/IFRS. Thank you for listening. I'm your host, Ruth Preedy. Happy accounting. The preceding programme was brought to you by PricewaterhouseCoopers LLP. This content is for general information purposes and is not a substitute for consultation with professional advisors.